Hi everyone, I'm Paul, and in today's video I'm going to be stepping through how I used ICT's fair value gap method to generate a 24-hour return on Bitcoin. Now I know this sounds very clickbaity because it is, but this was actually a real trade that I did on my test account, which has about $1,000 in it. So whilst this was an outstanding trade, unfortunately no Lambo for me. For those of you that have been watching my videos, you'll know that I've been working my way through ICT's 2022 mentorship program. This program's free on YouTube and covers ICT's fair value gap setup. So if you're interested, I'll link to ICT's page in the description of this video. And if you're interested in following me on this journey, please subscribe to my channel. In this video, I'm going to be going through this trade setup in Bitcoin and end to end how I applied ICT's teachings to this particular trade setup. So if you enjoyed this video, it'd be great if you could like it because that helps other people to find it. And if you've enjoyed this video and you'd like to see more of them, then please subscribe to my channel. So enough chatting and let's jump in. So starting with the weekly view of the market, this is where we set our bias for the rest of the week's trading. This was a trade from Tuesday, so yesterday. That would make it the 15th of March. So there'd already been Monday's day's trading already in the week. So we already had a little bit of an indication for how the week might play out. Looking at the weekly charts, I wouldn't really call this looking particularly great. We've had all the trading over this whole period pretty much since the start of the year, down and then retrace, up and then retrace, and that's been the pattern all the way through. Whilst there's been some signs of the market recovering, you can see that every time we've traded back up into this range, right up into this sort of supply zone up here at around sort of 45,000, the market's just retraced backwards. So we're very much been range bound. Whilst the market's sort of at a 50-50 coin flip at the moment, from this position, the market, this sort of lower level around the 37, fairly bullish because we're obviously trading in a range. And the thing that sort of gives me a little bit of more confidence at this level is that, we've been pretty much flat. Whilst we've wicked up and down, you can see we've been trading pretty much flat. And I guess what I'd be looking for is for the market to move in either direction. Now, if we actually go out to the monthly chart, this is even a little bit more clearer. Now, I don't generally use diagonal resistance, but you can see, we've had a decreasing range here. So from January, we had this quite big range, even though it was down. We had an up range here in February. Again, you can see from the high to the low is smaller. And then again in March, so far, we've had this sort of descending, so lower highs and higher lows. And so that sort of makes my bias, going into this week a bit more bullish. And if we go down to the daily, you can see we've already had, this big candle here. Now, given what's happened in the past, you'd expect it could potentially retrace, but my expectation is it will continue to the upside and potentially, target around this level. So that's what I'm really looking for, is for price to be drawn up to this level here, which is, kind of been the temporary top of this range. And we might see a continuation upwards later, but certainly in the near term, I'm expecting price to sort of be drawn up from that point, from this sort of bottom of the range position. So if we zoom into the hourly chart now, and so this is where we're really looking for where the sources of liquidity would be and where stops might be residing. From ICT's teaching, one of the things that we need to keep in mind is that we have a bullish bias going into the market this week. So we've already had an up day. We don't really know how big that expansion to the upside will be, but our bias is bullish. Now, when we have a bullish bias, what we should be anticipating is a move in the other direction first. So we'd expect a stop hunt to the downside before we get a movement to the upside. And so what I need to do is look at the previous session and look where those stops might reside. So a clear place that I'd be looking at is, you can see this low here. And the interesting thing about that is that it also resides here, where you can see there's, clearly a demand zone there. So you can see after this small down candle here, we had an immediate race up. So that would seem to be a point where there would be liquidity in the market, buyers sort of sitting in the market, a demand zone. And there's also a small fair value gap here as well. So I'll just outline that now. So you can see that's the gap here between the high of this candle, the low of this candle, and the body of this candle. So this would be a bullish fair value gap or imbalance. And what we'd expect is if the market's bearish, that it'll seek out that imbalance and try and close it out. So there's a few things sort of indicating that price could draw to this point before it takes off again. And you can see, going back to this demand zone, is that when the market came down here in that previous session, it immediately took off again. So that would be an ideal place for the market to reverse, especially if it's going to retrace from a higher level from the close from the previous session. So if we zoom out a bit, we've got this upper bound here where we expect price to be drawn to, not necessarily in this session, but certainly over the next few sessions. And in terms of for the setup for this trade, what we're looking at is a stop hunt down to this lower level here before we have that move higher. So if we zoom into our 15-minute chart now, this is where we start to look for the market to move towards this zone here and start to hunt those stops before we can start to look to enter our trade. So we can see the next session begins here. This was the beginning of the previous session, and we're going to close fairly close to the highs here as we enter the next session, which is the 15th. So we'll just play this forward. You can see the market immediately starts to sell off, and where we have price starting to gravitate down towards this stop. So we'll just keep playing it forward. We'll just pause it here because it's about to hit. We'll just go forward another couple of candles. You can see the market will spike down previous low from the last session. There it is. So that's that stop hunt we were looking for. So this is what we're talking about. We have a bias to the upside, so we're expecting higher prices, but in anticipation of that move, we're looking for a stop hunt in the other direction first. So this is that movement. So now we're going to zoom right into the 1 minute chart, and this is where we're looking for our trade setup on this time frame. So we'll just play this forward. Now I was actually doing some back testing when this trade was unfolding, and I just sort of noticed it, and so I was a little bit rushed, and I'll go into some of the things I messed up in trying to get into this trade and why it wasn't quite as good as it should have been, which I know sounds crazy when you're talking about a 24-hour return, but I'll talk more about that in a minute. So I was doing some back testing as my homework for one other videos that I'm doing, and I saw this trade start to unfold, and so I jumped into it. So we'll just have a look. And so what's happened, so the market's run down, we've run these stops from this previous session. And you can see we've sort of had equal lows here. So we had a low here, another one formed here, and then we've just ripped through both of the stops. So you can imagine you would have traders who have set their stops both at this level and this level and then this level, and the market's just blasted through them, which has then led to this overshoot, which is exactly where we're looking for our setup. So I'll just zoom in a bit more, and so you can see what's happened. We've had this penetration through that level, and then the market's recovered. So we've now got this lower high formed here, and here's our fair value gap forming right here. So market's come down, we've made a lower high, come back again. This is where this fair value gap has been formed just here. So this is our downward candle. We have the body of this candle here, and then the low of this candle. So there's our fair value gap here, and we've now broken market structure. So we've broken market structure as we've traveled through that high, and we've now made a higher high. I'll just mark this out so it's more clear. So that would be our setup here, where you could have our limit to go long here at the low of this candle, and we'd place our stop at the low of this second candle. Now in the setup you can place it at either the first candle or the second candle, but in this instance this is the lower one, so that's the one I'd pick. I was watching this trade in real time, so I actually went in at market. Now I'll just check the price I actually got filled at. It was just a little bit under, so I saw the market come in, and I'll just play through so you can see the market trades down into that fair value gap. There it is there. So that's where I got set there. My stop was still set down here. Now if we play forward just a little bit, and I've talked about this in other videos. Now I haven't done enough testing on this to, I guess, quantify how to do it in a better way. But what you'll see, and it's probably coming up fairly soon, is that the trade's starting to go pretty well. We're already in profit, but it doesn't really get going with any authority, and then it quickly reverses, and you'll see we get a big spike down here in a few candles. is. And so I almost got stopped out. I was basically, it was 50 cents in it. So that was quite fortunate. And this is what I've talked about in other videos, is I've found that very often that fair value gap will get closed in, and sometimes it will overshoot by only a very small amount. I need to do a little bit more testing as to what's the better way to do that. One of the easy ways to do it, I guess, would be to just use this more extreme low, the lowest low here as the stop, and obviously that just means that this the distance between the entry and the stop is going to be greater, and so you're going to not have as good a risk return. So that may not be such a big deal. As I said, I need to do some more testing on that just to sort of see. Another easy way to do it would just be to put an extra couple of dollars, like $5 or something, just to account for that little bit of slippage, if you want to call it that. Again, I haven't really tested that enough. Normally ICT's trades, he's in and out quite quick. He talks about, really just picking off that low-hanging fruit. And so if you're wanting to do that in this trade, some obvious targets would be order block just here that you could attack. And if you were going to do that, that would be not a bad little return for potentially a quick trade. And you can see because the stops are tight, the risk reward's quite good. So that would have a risk reward of almost 4. And if you wanted to target, up into some of these previous levels, you're looking at about a 7R return there. That's not what I did in this case. Basically what happened, this trade really took a long time to get going. So what I'll do, I'll drop down to 5 minutes, just zoom in, and I'll just play it forward and you'll see what I mean. The problem with trading crypto is generally the periods where there's the most liquidity is when I'm asleep. And so that's not ideal. And so you can see if we just pause here, could have just set the take profit here, or maybe even partial profits here. Now the problem that I alluded to earlier in the video was I was in a bit of a rush because I was in the middle of doing another video. I was doing some back testing, so I was just multitasking, which I'm not very good at sometimes. And in terms of the entry on this trade, I didn't actually put the right amount of risk on it. As I was rushing, I don't know how, but I miscalculated. And, normally in this test account, it's about $1,000. And so, I only put about 3% on each trade. And so, extrapolating out, it's generally about $30 worth of risk per trade. Now, for whatever reason, I only put like $9 on this trade. So it would have been fantastic to have had 30 on it, but it was only 9 because it would have, bolstered out my test account for a long time. So unfortunately, it was only $9. And so part of that was then, bullish bias anyway. And so I just decided to let the trade run. And because it was getting late, and I was like, it's only $9. I've got my stop in place. I'll just let it run. And so that's what I did. So I probably went to bed around here, and you'll just see. And the market just over that course of the session just grinds towards, just grinds higher. So you can see the market's just grinding higher over the course of the session. And most of this I'm asleep. Yeah, and I think around here I've probably gotten up again. I did some training, so I had a look at the trades, but it's going okay. It had pulled back a little bit, and again, because it was only a small trade, I just decided to let it run. And then as we went into the next session, this happened. So we had this big spike, this big rip up. So where I got out, 44.94, and so that's actually where I got out. Now, I can't remember exactly why. I think I probably would have been looking for this this order block over here. Probably if I'd been watching this trade and I actually had, that full $30 worth of risk on it, I probably would have played it a bit more conservatively. I just wouldn't have let it run. But nevertheless, that's actually what I did do. So you can see it's actually more than 24, it's 25. So, that's a fantastic result, and, I think really testament to this trade setup. And so just in terms of trades here, you can see here's the entry here at 38,323.5, and then the contingent order here to get out at 44.94.5. And if you're wondering, I actually had some other small positions open that I was doing other sort of testing with, and I just rolled it all out at the same time. So there you have it. There's my 25R trade on Bitcoin. I haven't been keeping great records in this little bit of testing I've been doing in these live trades, but as I start to gear that up, I'll certainly do that a little bit more thoroughly so I can start to share that data with you. As I said, I haven't been keeping super good records, but I've probably done about 5 or 6 live trades using this setup, and I'm definitely at a better than 50% run rate. And as you've seen from some of the videos I've shared, is the risk return on these trades has been quite high. So I've been using good money management on all these trades, even though they're test trades. So generally putting about $30 worth of risk and getting anywhere between 7 plus on a trade. So that's been really good, and certainly at this stage seems to be pretty profitable. So pretty excited to do some more work on this and just keep working through the mentorship program and refining my understanding of the system and practicing it more and more. Still haven't done heaps of back testing, so I need to do some more of that. But yeah, overall looking really positive and looking forward to sharing some more of that on the channel. So thanks for watching, and I'll see you in the next video.